The Bank of Canada cut the interest rate again by another 0.25%. Before this month, we saw 2 rate cuts back in June and July. How are these rate cuts actually impacting the Toronto real estate market? We always assume that home prices are going up and buyers are getting busy again with making offers. And we think these things happen the second after the rate drops, by only 0.25%. The biggest question I always get is, prices are going up now, right? But this isn't actually the case. So in this video, I'm going to share with you exactly how long it takes for the market to pick up again after each time the Bank of Canada made the decision this year to cut the interest rate. And I'm going to share that analysis that goes as far back as June when we saw the rates drop for the first time this year. In June, we saw the rate drop for the first time in 4 years. For 2 years, 3 months, and 3 days, the Bank of Canada brought rates from 0.25% to 5%. It was the fastest rate hike cycle since 2001 that took place between March 2022 until June 2024. New home construction slowed down because of expensive construction costs and the lack of buyers domestically and internationally. The resale market, where people typically purchase real estate from, became so much harder to get into because of higher mortgage rates. All of this caused home prices to fall. It wasn't until June 5th when the Bank of Canada finally made the first rate cut in 4 years. They dropped the key interest rate from 5 to 4.75%. People immediately started to wonder if it was a good idea to get into the market. When they're asking that, they're really asking if prices are starting to go up and if mortgage rates are going down, because those are the 2 factors that matter the most that determine whether or not someone can get into the market. Have home prices hit the bottom and are set to go up now? Have mortgage rates already come down, making it easier to qualify for a mortgage? Here's what happened in June after the first rate cut. We saw 6,200 sales transactions. And I think the most interesting thing about this number is that during the entire month of May, before the rate cut, sales in May were at 7,000 for the month. So that works out to be an 11% drop in sales. But why did sales drop? It could be that people were anticipating mortgage rates to change, so they waited the month. But the thing about that is that during the process of getting pre-approved for a mortgage and buying your home, your closing date could be about 2 to 3 months out. So during that time, you can continue negotiating the rate with your lender that you were already pre-approved for. And if they don't show any flexibility with bringing down the rate for you, then shop around. Just because you anticipate the rate to drop, it doesn't mean you have to wait for the rate to drop. The rates can change before you close the deal. If you're thinking that one rate cut of just 25 basis points will impact home prices, think again. Just 1 month after the first rate cut in June, the average GTA home price changed by only $3,500. Most people would have thought that home prices would actually go up after a rate cut. But the reality is that the impact of any rate change takes time. The impact of cutting the key interest rate by 25 basis points would slowly impact the real estate market. It will take time for home prices to change unless the change to the key interest rate was drastic enough to force an immediate change similar to what we saw in 2022. 10 consecutive rate increases, one after another, with some as much as 1% in just 1 month. In June 2022, the key interest rate went up from 1.5% to 2.5%. The rate reductions are still taking place this year, and they're going to be slow. So that's the difference with just one rate cut. Throughout June, home prices didn't change much, but sales dropped 11%. Now let's look at July. In July this year, we saw the key interest rate drop a second time by another 25 basis points. But now here's where it gets interesting. Sales fell again to 5,400 transactions in the month of July. How did sales drop another 13% after 2 rate drops? You'd expect for sure now that sales would go up, not down. What all of this is telling me is that the cost of ownership is still too high when you consider the cost of borrowing to get a mortgage. And the impact of 2 rate drops has not been enough to get the majority of buyers back into the market yet. This is obvious in these numbers alone. If sales are falling, the motivation to get into the market as a buyer was not there in July. Home prices are another determining factor in all of this. Even though home prices came down between June and July, this was still not enough to motivate buyers to get back into the market. The average home price in the GTA was about $1.1 million. The average price came down by 5% between June and July. So sales came down 13% and home prices came down 5% after the key interest rate had come down 2 times by a total of 0.5%. These are slow rate drops, which we can also assume will slowly prop up the real estate market later on this year or next year. Because back in July, buyers were not buying despite inventory being available. And this is the one thing to watch out for, because once existing inventory disappears, it's only a matter of time before the rate at which new listings come out does not keep up with the rate at which buyers get back into the market. And when we start seeing this, that's when we're likely to see home prices and sales trend upwards. And we did see a dip in inventory across the GTA. Throughout July, new listings were at 16,000 for the month. That was a drop of 11% compared to June. So it's possible that we're going to see a tighter real estate market with reduced amount of inventory available as the year goes by, with the potential of further rate drops coming. If you like staying updated with what's happening in the market, then subscribe to my channel. New episodes are coming out every single month with market updates and the best tips to help you reach your real estate goals. Now let's get back to it. Okay, so now we've looked at June and July when we saw the first two rate cuts of 25 basis points each, and they've essentially had the reverse effect of what everyone was talking about. Everyone thought that with each rate drop, we should see home prices go up and sales go up. This is simply not the case when the key interest rate changes by a fractions of a percent. Something dramatic would have to happen, and that's just not in the cards that the Bank of Canada is willing to play right now. Rate cuts of anything more than 25 or 50 basis points at a time would be reckless and have a negative impact on the economy. We didn't see the key interest rate change in August, but the month gave buyers and sellers the time to think about what they're going to do. Did home sellers wait to list their homes to avoid selling at a low price? And did buyers get back into the market? Let's take a look at it. In August, we saw home sales remain more or less the same, with more than 5,100 transactions recorded so far. And I'm saying so far because it's still early in the month of September and not all transactions have been recorded yet. But as of right now, it's standing at about 5,100 sales transactions and likely to increase by the time everything is said and done. How funny is that though? The June and July rate cuts dropped sales, but the lack of any change to the key interest rate didn't change sales at all. Let me know in the comments what you think that means. In August, there were about 14,000 new listings. That's another drop by about 12%. And remember, this is the one thing that we need to watch out for, because the lack of supply eventually creates a ripple effect in home prices and the amount of sales we see. Once the supply in the current market gets either purchased by qualified buyers or it gets taken down because sellers change their minds for whatever reasons that they have, and that inventory disappears, competition in the market will grow. The buyers are now competing in a market where there are less options, and so they're going to do whatever it takes. This includes increasing their offers, and buyers will do this if they know that they're qualified to support a higher purchase price, which can happen if mortgage rates come down, and that's happening right now. In this month's rate cut of another 25 basis points, it was also announced that future rate cuts are still to come. A total of 75 basis points will create a minor impact to the overall GTA real estate market. We're getting into the fall market now, and we can expect to see further rate cuts in October and December. If the trend continues and we see rate cuts of about 25 basis points each time, then we could see the key interest rate at 3.75% going into 2025. Stay updated with what's happening in the market, subscribe to my channel, and share this video with someone if you gain value. New videos are coming out all the time. Thanks for watching, and I'll see you in the next one.